take you through the basic trade setups initially, just so we can do a recap, and we'll start back, or we could start back as early. We'll pick a couple of winners, a couple of losers, so we get a good feel for both. So let's have a look at our first trade here, which is a long. Now we know it's a long because we've basically got resistance set up there, which is our red level of resistance there. You can see that it's the thicker of the lines. That's our resistance point. And as soon as we break or close above that area, we've basically got a trend breakout. So what I usually do, and this is what I mentioned on the video, is my rule of thumb is that I just mark up on the chart where the high is, so 112.48, and I'll just mark that up. So my entry would be a buy at 112.49. Now some of you might decide that 49 you don't want to go in at that level because of the 50 level, and you might adjust that up to 51 or 52, but let's just assume that we're not going to make any adjustments here. We're just going to take the standard trade setup, and you can just, as soon as the trade prints the cyan candle, you can basically just take the buy setup. So our initial buy would be at 112.49, and we would work a stop based on our trailing stop, and you can see it there it is down there. The little green dot is your trailing stop, so that's your setup candle at 447, and fairly easy. It's 112.30 is your stop there. So, and you can see that as price moves in your direction, so does the stop. So everybody's pretty okay with that. It's very easy setup, very basic. Now the point here is that not every time that a trade sets up will you have your trailing profit down the bottom here. What you'll find sometimes is that instead of having that there, you'll have that support level, and you would use that as your initial stop. So, or you might decide through your testing that you really only want to work a stop of say 15 points or 18 points, whatever it is that you decide. That might be your starting point for your stop, and then once price moves in your direction, you start to follow it up and trail along. Now again, there's a variable here in that your stop as you move up, you can move that and work that 2 points below, 1 point below this line here. You could work it on the line, you could work it slightly above. So there's a bit of variation as to how you manage or risk manage your trade, but the basic setup is, as I've said before, it's as soon as you see the cyan candle, you're in a long trade, and then you're working your stop based on what your risk profile is. Now remember, we spoke about this last week, determining what our level of risk is. So some people are going to have probably a slightly higher level of risk. Some people may be a little bit more conservative and want to chop off their risk fairly quickly and make it as though that, or you know, keep their trades fairly tight once you enter the trade. Now that's okay, but you've just got to make sure you've tested that up, and you want to at least have tested, I would say, a sample data of between 80 to 100 trades ideally, and the more the better, because you're going to get a better spread of data. Now with our targets, now I did mention in the video that the targets, I use a trailing stop on my target. So what I'm doing is I'm basically letting price take me out of the trade. So once I get into the trade, price is going to take me out based on the trailing stop. So let's have a look at the target options, and we mentioned this last week as well. So target options, you've got, now ideally whatever your average trade loss is, or your average losing trade, and we'll say hypothetically speaking that it's 15 points, our target should be at least be 20, or actually 25 plus points. So if you're going to work a fixed target, I would be looking for a 25 plus target. If you're going to work the trailing target, then the market takes you out based on whatever happens with the trade. So in this instance here, we would have got in there at what did we get in there at 49, and we get knocked out around here at say, well, if you worked it on 40, so you'd have a 9-point loss. If you took it 2 points below there, you were looking at about 11-point loss. So that would be your first trade, negative 11. Then for me, the next trade would be a short there, and the trade would set up at 112.33, and I'd work a point below, so 112.32, and that would be my sell setup. So I'm in the trade. You can see there that we do have the stop. That's the initial stop point. If we didn't have that initial stop, so as soon as you get triggered into a trade, you're looking for where the hard stop is, that initial stop. It's either going to be previous resistance on a short, it's going to be the initial trade stop, or it's going to be the previous swing high, so, or the most recent swing high. So for us here, the other option for us is that we use this level here as our stop at 1112.53. Now this is more for the manual testing. If you're auto trading this strategy, then I'm going to show you what happens with the auto trader in a second. But basically for manual trading, you've got one of three options with the stop. You've got the actual stop itself, which you'll see is there, the red dashed line, TP it's called, trailing profit 1112.51. You can use the previous swing high, which is 53, so you'd work at probably a point or two above that, or you can use the previous level of resistance, and that would be 1112.47. Now all of those stops are well and truly outside of where price went, so you can see that price did push down, and this was one of those trades that everybody likes to be on. So you can see here that it moves nicely down, and just a great trade, and eventually gets taken out there at 111.72 if we use the 2-point stop just above the trailing profit there, so we're out, and then it swings into another long setup. So that's fairly easy to kind of identify where the trades are, the buy and sells. They're very easy. There's not much else to them. There's no other setup there on the trend trader. You're either buying the market on the cyan or you're selling on the white. You've got a trailing stop. That's pretty much the stop. The only question is whether you, when you first take the trade, do you actually use the TP or the trailing profit, this previous swing high, or the level of resistance. So that's really a personal trading preference thing, and there's the three options there because we've got people who want to trade it slightly differently, so just a little bit of variation there on the stop strategy. So what else was I going to mention? Right, okay, so that's basically the two types of trades. You've got the buy and the sell. Now I did mention the best time of the day to trade this. Now what I'm finding is that a great time of the day to trade the trend trader is actually between, and I'll just bring this up here. Actually, let me get the latest stuff here so we can see it over a longer period of time, and I'll just check the dates on this as well. So I've been tracking this from October, the 1st of October, and I'll just give you a snapshot of the last 3 months, so or last 2 months I should say, and let's have a look at the equity curve on it over the last 2 months. So this is the 89 tick, and you can see here that it's been a pretty good run up, so it definitely is a good time. Now the settings on this trade, if you want to write these down, because you actually all have this strategy back test. I'm going to show you how to use that today or tonight. So if you want to write these settings down for the 89 tick, we need to write from 2 a.m. to 5 a.m. So that's our time. We need to write an initial stop at 16 ticks, and we need to write down that we've got a -6 trailing profit, so it's trailing it by -6 on that line. So if you can write those down, that gives us our kind of our parameters for our best settings for the 89 tick for the auto traders. So that's we'll come back to that. So that's crude from 2 a.m. to 5 a.m. That's New York Exchange time. And you'll see that, as I mentioned before, the equity curve pretty good. It took a little bit of a pullback here, and it's had a little bit of a run down here, but generally a nice little run up for the last 2 months. So not a lot of trades. There's only been about 80 trades, so that's not a bad number. And I've actually got, if you're wondering about brokerage, I've actually got brokerage costed into this model. So this is net, so it's not without brokerage. So I've got the brokerage factored in, and I'm going to show you how to do that as well. So most of you have got this this trend trader strategy loaded on your platform. Is there anybody not set up with the trend trader yet? Alright, Adrian, so we need to get you sorted out. Okay, Chris has got it loaded up, great, and Nick we've got to get sorted as well. So basically what it is there are, this is really one of about 5 different strategies. So if I go to MindJet and I go into the V2, so I'll just take you into our V2 training here just to explain it and give you a little bit of an overview. If we go into the V2, and we'll open this up. So the V2 is based on, it's really utilizing volume, price, and the size of the trade to work its edge. So it's come up with all the strategies based around 5 different, or the systems based around 5 different strategies. So what we've got here is the trend trader. That's one of 5, and you'll see there that it's got its buy and its sell setup. Obviously tonight's a live training session. Then we've got a cycle trader, breakout, momentum, and then we've got a pattern trader, volume and price action.